Alrighty, folks, in this video, as promised in video number 1, we are going to talk about the consumer. Is the consumer so damaged that they are just going to refuse to play? Are they going to just boomerang back and starts to spin? But before we do that, we'd be remiss if we didn't talk about inflation, which is coming out in less than 24 hours. Again, headline inflation was 2.4% last month. It's expected to fall 2.3% this month. And somebody I know, trust and respect, actually thinks it might surprise to the downside and come in at 2.1. I have to talk about inflation with Taylor from LifeGoal Investments, and we're going to postulate just how much Trump would lose his mind if inflation came in at 2.1. Again, that's not my call, but it is out there. Taylor, man, how you doing?
This video started with me chuckling, and I was just chuckling at the thought of just, he's going to lose it. He's going to absolutely lose his mind. It's funny. We could certainly talk about inflation, but it was funny after the last meeting that Jerome Powell had, when he did not cut and he spoke very vehemently about stagflation. The expectations for the Fed were for higher inflation and higher unemployment by year end. And I just said, I put out a poll on social media. I said, is Trump going to come back and slam him for this? And I actually was on the side that I didn't think he was going to. And the reason was because last time we talked about firing him, the market cratered. So I'm like, you know what? He's learned his lesson. No, he came out and hammered him. Oh,
You got a new nickname, Mr. Late.
Mr. Too Late. Yep, exactly right. A total stiff in Mr. Too Late, I think is what he called them. So anyway, the banter, I mean, at this point, you have to laugh at it because you can't take it too seriously. But if inflation comes in at 2.1, like your buddy forecasts, Trump will be on the microphone. He will be on the keyboard, slamming things out on Truth Social, no doubt about it.
Let's ask this question again. 2.1 is really, really close to a target of 2. You also have very well-respected analysts out there, frankly, billionaires saying the 2 years telling you you're too high, right? I think the 2-year last I checked is 3.99, which is a full quarter below, where the Fed funds rate is. And, we're just going to play with this for a minute. 2.1 headline tomorrow. Is the cut justified?
I said the cut was justified last time, if you recall. So I said at the May meeting, it's justified. I've been in the same camp you're in that, and I'm not trying to put words in your mouth, but I believe you believe this as well, that this is going to be more, tariffs are not, yes, they drive prices higher, just very naturally. If things cost higher to import, it's going to drive the cost higher. But I think at the end of the day, our both assertions are that it won't be as inflationary as it will be demand destructionary.
Correct. Yeah.
You can only push so long on a consumer that's seen 25% increase on the goods that they've purchased from 5 years ago and expect them to continue to be able to digest higher and higher prices. So at some point you wind up pushing on a rope. And so as costs go up, you try to force it through and the consumer says, no mas, I can't afford it anymore.
Yeah, no bueno. One of the things that I think will be interesting tomorrow, and again, we're just playing with the idea that comes in at 2.1, is, again, like you, I think President Trump will just lose his mind, and the level of bashing of Trump and the entire Fed will. It might not be right for TV, right? It'll be loud. It'll just be so loud and vehement, and it'll just be bad. But here's the reality, right? As somebody who studies the economy, I have been warning since January of the next 3 months. I don't know if you've looked at the base effect, but the base effect the next 3 months is basically flat with one deflationary number.
Right.
So if you just step back and look at it, yes, tomorrow we could print 2.122. It could happen. But equally likely is that in 3 months, we're back at 2.6.
Right.
Right. Both of those things can be true.
Do everyone a favor. Explain that more fully, because I know exactly what you're referencing there. I don't actually know the base effect numbers. So just back up a step and tell people essentially how this could be a little bit misleading. And it's just the way the numbers work. It's not that anyone's massaging them.
No, it's just math. So when you get a yearly CPI number, it's basically the cumulative summary of the monthly numbers. Every month we get 4 numbers. There's a yearly number and a month-on-month number. Most people don't talk about the month-on-month because They're not in the weeds. But the month-on-month number is probably the most important one. So not this one. This one, we're dropping off a big number. I think the big number is like 0.4. So if we get a 0.1, there will be a drop of 0.3. That's just how math works, right? That's just how it works. However, the next 3 months, we have a 0, it's a 0, negative 0.1, and a 0.
Yeah, right.
So for 3 months, the collective total is negative 0.1.
Right.
If we only get a 0.1 or a 0.2 3 months in a row, inflation will appear to have exploded higher to 2.6. It's math. Right. And Powell and his other 18 cronies know that.
Correct.
I don't think tomorrow morning Trump will be looking at the future. He will be just saying, the Fed, you beat inflation, cut. And then you come around and you got Arthur Burns 2.0 and inflation's all the way back at 2.6. A cut would be a huge mistake.
And it looks
knowing
nasty.
What's coming. Nasty.
Even though, again, it's not actually indicative of what's being felt. When you look at it month by month, that's the important thing to look at. Year over year, it comes with these big ambiguous rear view mirror. What did it do that month of last year, which really aren't indicative of anything. I will stand in the camp that, like, one, I do think that the Fed should remain a completely separate entity that doesn't have political influence. But I actually stand with Trump in this one. I do think that a cut was warranted. I think the 2-year Treasury has been leading the Fed, and therefore the 2-year Treasury told the Fed to cut, and they didn't. But I do give some reprieve to the Fed in the fact that, like, we don't know, and unemployment is really low on historic, numbers. If you're just looking at rear view data information, it's hard to really justify a cut. And the Fed is, and they will tell you this time and time and time again, they're data dependent. So data dependency, like if you look at the numbers, a cut wasn't justified. And it probably won't be justified next time either. But I think if you're trying to be all forward looking, that I think that a cut is justified, because I think inflation really is not all that meaningful. I know prices feel high. Don't get me wrong. I'm not an idiot. I know that when you go to the grocery store, stuff seems expensive, but the rate at which the expensive nature of that is going higher is pretty darn slow right now. And I'm more afraid of a pickup of unemployment, given the uncertainties that the market's facing around what the hell is going on with trade policy and tariffs, et cetera.
So let's switch to the consumer, because again, as a consumer-based economy, we really drive the economy year in, year out. It's not government, it's not private enterprise, it's the consumer. And, the consumer has been beaten up for years, right? Inflation is up 20, 25% more in some areas. There's been a level of uncertainty created because of this trade war, embargoes, nonsense, recession calls that have really beaten up the consumer. We're seeing it most. Interest rates.
That's hugely important as well. Yep.
Yeah. So, the consumer, if you're in a fight, they're getting a standing 8 count for sure.
Yep.
And I just don't know if this good news, an outline of a possible agreement with China, even agreements with Mexico, Canada, and the EU may be coming in the next couple of weeks. I don't know if that's enough to get the consumer to open their wallet. I traditionally think the consumer is extremely predictable, and typically when their behavior changes, which I do think it changed in the last 30 to 60 days, it typically holds for at least 6 months. I don't think the news cycle, hey, agreement with China, is going to open people's wallet. I think they're going to still be conservative. What say you?
It's interesting because all of the soft data, the surveys, say that the consumer is living under a rock, in a bunker under a rock. Like they covered the bunker with a rock. That's how conservative they've been. The data hasn't shown that yet. Now, granted, this is more forward looking with surveys, and the data is more rear view mirror looking, but you haven't seen the weakness yet. The consumer has been incredibly resilient. Like the consumer has been what's driven.
It's, again, I think some of the most recent consumer behavior was actually just smart economics 101. They heard tariffs are coming. Yeah, they heard tariffs are coming. The average person thinks tariff equals taxes. and they thought their car, their widget, their thing would be
Very
more
fair.
expensive if they waited. So that's why I think Q1 was artificially goosed. I think Q2, certainly April, artificially goosed. But again, I think that creates a demand vacuum, right? An air pocket.
Very well could. My point is just that none of it's actually, you can't see any of it yet. Right.
Yeah.
And so again, that's like back to the Fed. They're looking for data they can see. I agree with you. It is hard to make the argument that at some point the consumer doesn't throw their hands up and say, I can't do it anymore. And right. So interest rates are freaking stubbornly high. Who can buy a house right now? One, you don't qualify for a mortgage. It's incredibly hard to qualify for a mortgage right now. Home prices are not softening in most parts of the country to any meaningful degree, X maybe a Florida or Texas or Arizona or something like that just got overbought massively to begin with exodus out of COVID from big East Coast cities to those states. They're softening, but that had to happen. It was ridiculous what was going on with the prices there. But the data doesn't show it yet. And that's what the Fed is hanging their hat on. I'm with you. And I have been with you in the camp that it is tough to justify the consumer's ability to continue to spend at high interest rates persistently with the leading use of funds going to housing, which persistently remains high. Rents are high. Housing prices are high. At some point, you do just get this exhale of, I can't do it anymore. Now I need to slow down and be a grown up and not go out to dinner because I need to prioritize. Or whatever, I'm just using that as the example, but whatever it needs to do, if they start to, rein in on these purse strings, like the consumer's 70% of the economy, and it will be felt very, very quickly. The sentiment shift, the soft data says that they are shifting. The hard data needs to follow through. And that's still a little bit TBD.
Yeah, it's really interesting. Every week I report on my daily financial news, the economic reports that come out day by day. And usually I pick what's the most important. So I picked consumer sentiment that comes out Friday. The reason I picked that one was because that's going to be our first, again, soft data to your point, but it'll be the first report with tariff impact, right? A lot of the reports we've got to date were pre-tariff and frankly should just be thrown away. They're irrelevant. I think consumer sentiment on Friday, which should incorporate the, Liberation Day, right, which was April 2nd. I think it's going to be really telling.
It's going to be really ugly. There's no way it's pretty. There's no way it's pretty, right? Unless I don't know how real time these things are. If they're done up literally to the last minute, and we've got this China deal or whatever. No. So it's going to be nasty. But the really important part to also realize, just on the strength of the consumer side of things, and I'm just playing devil's advocate a little bit here, is that they're still employed. Broadly speaking. So when people are still employed, like the friend says, let's go out for cocktails. They're like, shit, I'll go out for cocktails. I got a job. Like, we can do this. When they start getting laid off, that's when you really see a dramatic shift. And we'll see how much this impact of tariffs now that were underway in place for a month on China, which we bring in obviously a lot of goods from China. And now we persist longer with Canada, Mexico, and the European Union. Canada and Mexico are larger. I believe the conglomerate of the European Union is also a larger trading partner than China is. So those are 3 out of the 4. We got maybe the toughest done in China, at least a reprieve. We don't know what it actually will look like. We got the 4th largest done, and the 3 largest still remain outstanding. Yeah.
So the last thing on the consumer front is I don't think it's lost on anyone that the top 20%, they have, if you believe the reports, are at least 50% of discretionary spending. I do believe that the top 20% also pulled back as peak uncertainty was unfolding. It'll be interesting because, again, the top 20% has the most exposure to stocks. And again, the stocks are screaming higher. It'll be interesting to see if this positive wealth effect kind of unlocks them, or if they're looking at this as, this is just yet another head fake and I'm going to stay conservative.
I think from an economic perspective, at least if you look through the lens of our clients, they're literally just like, I don't know. I'm tired. I don't even like keeping up with this. Like, what the hell is going on? I don't know. But yeah, but now their pocketbook is back full, right? Because essentially the
Yeah.
S&P is flat for the year.
Wow.
But I do think there is some fairness to your point of like, at some point with just the uncertainty, the unknown, the bing bong of the economy, the big bong of the stock market, not so much the economy, has caused them to say like, all right, enough's enough. I don't know what's going on. Let's take a little breather. I think that's a fair
Yeah.
assertion.
Very cool. Well, at the end of the day, this is always fun on Mondays. Where can people find you?
Yeah, find us on Instagram. We are at LifeGoal Investments. If you're on TikTok, not Instagram, we're there as well at LifeGoal Investments every day doing 60-second videos.
Thank you so much.